Hi, Clint Coons here with Anderson Business Advisors, and in this video, we are going to discuss wholesaling real estate and the proper entity setup for that particular type of activity. All right, let's get started. Okay, so when it comes to wholesaling property, many of you have probably been to some courses before, you've read it online, some different ways you can structure your wholesaling activity. But first and foremost, the thing that you need to be aware of is that wholesaling itself is an actual business. And what I mean by that is that the assignment of a contract for a fee. So when you tie a property up, you get it under contract, then you assign that agreement over to another individual who's going to ultimately close on that property, and they pay you a set amount of money. That is active income. That should fall onto your Schedule C if you're doing it in your own name. But most assuredly, you do not want to wholesale in your own name because A, negative tax ramifications, just like I talked about there with Schedule C income, which is subject to employment taxes. In and of itself, that can be a problem. Number two, when you see Schedule C income on a return, it's going to make it more difficult for you to take down other larger deals where you actually may want to hold those properties and you have to apply for financing. Because let's face it, banks do not like people who are in business for themselves. They scrutinize them much more. So that's a problem right there. The other issue you have when wholesaling in your own name is liability. Because let's face it, you're tying up a property with your name. So you're going to the seller and you're saying, I want to buy your property, here's some earnest money. And then you're having to go out and find someone to sell that agreement to step into your shoes, because most likely you don't have the financial resources to close on that property. You don't have the credit where you can obtain a loan to finance that property. So you're relying upon someone else to step into your shoes, make sure that they can close on the property and you can get your earnest money back. Now, the issue that comes up, of course, for individuals who do not close because they can't find a buyer is that the seller has other remedies. It's not just keeping your earnest money. The seller could actually sue you for damages. Now, if you're wondering what the damages might be, well, think on this. You tie up a property under contract, you have it for 60 days, and you cannot close. Well, that seller has taken that property off the market. So during that intervening time, did that property increase or decrease in value? Well, if it decreased in value, then the seller could hold you potentially liable for that difference in the decrease in purchase price from what you tied the property up for under that original agreement. So we have two issues. We have taxes and we have asset protection. So we want to make sure that we're covering both those bases when we're structuring our wholesaling business. But there's more to it than that as well. As I'm about to show you, we're also concerned about perception. That is, we don't necessarily want the seller to know, of course, what we're doing, because when you're wholesaling property, I mean, you're actually picking up deals where there's a lot of meat left on that bone and the seller doesn't know it. And so you're tying up a deal that has, a lot of upside for the potential buyer who's going to come in and purchase that property, and it leaves enough there for you to make some money. So how do I like to set these deals up? Well, number one, what I want to do is I'll typically start with a corporation. All right, this could be an LLC tax as a corporation here. The only distinction between the two, if you go LLC or traditional corporation, is going to have to do with whether or not you have some educational expenses. That is, did you take some training to learn how to go out and wholesale real estate? If so, and you want to deduct those expenses and get the best structure in place so you can write it off into the future, then the C corporation, traditional corporation, is the preferred route. And I can talk about that on another video. But here, what I'm looking at is either LLC or Corp. Okay, that's the entity formation. But what's key is how you're going to have it taxed. Now, my preference for this deal is to have them set up as C Corps. I know a lot of people watch my videos, CPAs, and they'll say, C Corps, no one sets up C corporations. Why would you want to set up a C corporation? That has double taxation. I get it. You put double in front of taxes, and that makes people get really nervous. I mean, hell, I don't blame you. Double in taxes, I don't want to pay taxes twice. But you're missing the larger picture here. Where do you want to take your investing? For many people, wholesaling just a means to an end, to generate income now so they can start building a portfolio of real estate with the profits from their wholesaling activity. Whatever your motivation is for engaging in wholesaling, what I would recommend you do is set up a C Corp so you have ultimate control over your receipt of income. You see, with an S Corp, it's a flow through. And I have plenty of videos that discuss this. If you watch them, I don't necessarily have one on point, but I talk about this concept throughout. That with an S Corp, everything flows down onto your 1040. And a lot of CPAs, they really like that structure because you're able to minimize employment taxes. And there are strong reasons to do that. But in this particular situation, as a real estate investor who is wholesaling, I would rather have the control. That is, I don't want that income flowing onto my 1040 unless I want to take it out. And if I choose to take it out of my C corporation, it's going to come out as a salary, which means W-2, which makes me look better to lenders, number one, because they don't know I'm in business for myself. But number two, if I'm going to move from wholesaling to flipping and I want to have more after-tax income, with a C corporation, it's taxed at a flat 21% on any of the gains that are inside of there. So, think about your own personal tax bracket, state, federal, where are you at? Are you at a 35% overall bracket? Well, heck, I'm just going to save you now 14% in taxes. That's 14% more money you have to invest with. So I like the C Corp for the control aspect. So now, when you're going to enter in your wholesale agreements, there's two things you have to consider here. Do you have an agreement that allows you to assign it? So if you're using your own wholesale or own purchase and sale agreement that permits assignability, then feel free to enter in directly in the name of the corporation with the seller of this property. So you'll just contract with them between your corp and the seller. Now, if the agreement you're using or the seller objects to the agreement you present them, they want to ensure that you can't assign it, or it makes them a little nervous seeing your short form purchase and sale agreement with that ability to assign. Then put together an LLC to make the title offer on the property. So oftentimes what people will do is they'll create an LLC right up here that's owned by the corporation, and that will make the offer to tie up the property with the seller. So it's the LLC that's going to do it. And the reason why is that ultimately we're going to sell this LLC over here to my investor that I'm working with. So I'm going to move them the LLC, and then they'll close in the name of the limited liability company. So that's one way to do it. The other benefit of using the LLC is going to be that asset protection benefit that comes from that. So if something happens, the deal doesn't go through, the seller's disgruntled, they want to sue, well, they're going to sue an LLC that really has no capital. So there's nothing for them to recover against. So that can be a plus. But really, I use the LLCs in this scenario just to create flexibility for the assignments. And if you live in Texas, don't worry about this, because in Texas, all real estate contracts are assignable by their very nature. Now, this is how I would structure the deal, right? Either using the corp or using the corp that owns an LLC to tie up the property. Next part is something you ought to consider in structuring your wholesale business. Okay, so you've got your wholesale business, you've got some properties now that you've tied up and you're looking for buyers. Maybe you don't have a buyer's list yet established and you're just getting started in this business. Then you need to market these deals to other individuals. And so how are you going to perform your marketing? Is it going to be on Craigslist, Facebook, one of the other social media platforms? And so as you go out there and you begin marketing these deals, hey, here's a property, you can pick it up for $130,000. FMB is $170, contact me for details. Whatever that is, when you're out there marketing, the risk you run in doing your marketing is that the seller up here finds out that you're wholesaling, that you're flipping this property to someone else. I mean, they could see it on Craigslist and like, well, what the heck? I entered in to sell you a piece of property and you're out there trying to sell it to someone else. You don't even own it yet. Something seems a little shady with this whole deal, with what you're trying to do, and it makes you feel uncomfortable. And they try to back out of the deal, and so you potentially lose it. So I would not go out there and market the property under the name of my company. I just would not do that. I would keep something private. And this is where the little other entity that you need comes in. And that entity is going to be an entity that offers anonymity. And what I would do is I'd create a Wyoming limited liability company here that's owned 100% by your corporation. And this is my marketing entity. Marketing entity. And its sole job is to go out there and throw those properties onto Craigslist to market them, to find the buyers to come in. And by doing so, what you're doing is you're keeping seller up here out of the loop. So let's assume that the seller does find out about it, or somebody contacts the seller and says, hey, Frank, I saw that your property now is being listed on Craigslist. Well, of course, Frank's going to contact you and say, how are you selling the property you don't even own? You can step back and say, what are you talking about? And he said, Well, I saw that property's for sale. Well, who's doing that? There's this LLC that's representing it. Oh, that's interesting. Have you looked in to see who owns that limited liability company, who manages it? Well, nothing's going to tie back to you because the LLC offers privacy. That is, when you set it up in Wyoming, no information is collected about you if you set it up the right way. And if someone was looking at that, they wouldn't see that you're the actual one involved. And so it gives you this additional layer. And so I call it my marketing arm. It's not going to sell the property at all. That means no money's going to run into it when you actually, or not sell the property, sell the contract. It's just there to provide an anonymity shield so you can go out there and engage in your marketing activities without anything coming back to your parent company and alerting the seller to the fact that you're actually on both sides of these transactions. You're doing a wholesale. Maybe you have a realtor as well that you've engaged in. You don't want the realtor to know that you're wholesaling. Don't market these yourselves. Market them through a separate entity. So this is my wholesaling structure that I like to use for the clients that we're working with here at Anderson. We want to set up a corporation here, or an LLC, taxed as a corp, that's going to engage in the actual marketing of the property or setting up the deals. And then you're going to use that LLC on the side to go out there and market them. Be sure to catch my next video where I talk about wholetailing. Now, if you're not sure what that term means, it means how do you move from a wholesale into a flip? And how would that be structured in this type of arrangement? My name is Clint Kuhns with Anderson Business Advisors. Thank you for watching. Be sure to check out the show notes to gain access to our 3-day real estate tax and asset protection workshop that we teach all over the country. Take care, everyone.